from Alan Nuckman, Chief Market Strategist at Bullseye Option. Good morning, Alan. What are we to make of this seesaw effect? How much gravel can one take before it is not necessarily good for you?
The point on is that volatility is opportunity. You need the markets to move. Now, in the big picture, the S&P and the NASDAQ are still very close to 25% positive in 2021. So this pullback is some profit taking and well deserved, but it does present some opportunities here, I think, in a lot of stocks that got overdone. And as a trader, I want to see how the markets react, not how they act. And it was very impressive the way things came back after taking out that low from Friday, taking on that low from Tuesday, and then bouncing back. But yesterday was kind of a mystery. We'll have to see what happens from here.
So how are you positioning to play the markets right now? I mean, usually December is a pretty positive month. It's a good opportunity to, lock in some gains as well. I know a lot of people do some tax loss selling. What tends to be your advice this time of year, and how are you tweaking that now that we're in this fairly unique set of circumstances?
Nothing has changed, and really nothing has changed in the marketplace. Stocks are strong, and they are still the choice for yield. If you look at interest rates, yes, they might raise interest rates next year, but still we're at zero. So right now, stocks are still the place to be, and that's where the opportunity has been for a decade now. I don't see anything changing. And actually, in the last weeks, everyone's major concern was higher energy prices. Well, guess what? That's been alleviated, and everybody's concerned where interest rates. Well, look at interest rates have dropped dramatically here. The 10-year yield has dropped dramatically in the last week. So those are positives. Let's see how the markets respond. But I still think there's a lot of opportunity on the upside. I remain bullish. Nothing has changed, and I'm still looking for these pullbacks to readjust the risk reward in my favor.
Is that to say you're going to be deploying some cash to buy the dip over the next few weeks?
I'm definitely a buy the dip guy, and I don't care what time of year it is. Whenever those opportunities present themselves, it's been successful. If you look at the market, every time the market is sold off, it's rallied the distance of the drop from the top on the old high. So that targets 4,900 in the S&P if we get another V recovery. So we'll have to see. That's happened every single time in market history, I guess, until it doesn't. But I'm not going to be the guy that's going to try and figure out which time it doesn't do it. Yesterday we were only 2% from the all-time forever highs in the NASDAQ and the S&P. And, look at what we've been going through. So it's been quite a welcome back week. We had some volatility. But even with the VIX here, rallied to the 30 level, it's been between 37 and 14 for this year. So the midpoint on this is 25, and we were below 25. Actually, we had a very quick 20% drop from Friday to Tuesday. Yeah, it's flared up a little bit, but I still like the fact that the VIX has a lot of room to drop, meaning stocks have a lot of room to move higher because there's no sense of complacency. That's for sure.
So would you consider loading up on, say, Apple stock right now? They had that big 4% decline at the open, and there does seem to be, not just rumor, but a pretty clear reason as to what's driving the negativity, that being the concern that they're spreading to suppliers about possibly waning demand for their flagship iPhone.
2 days ago, they had a report that there was great demand in 2022 and they were expecting. So some people are trying to sort this out. Sometimes, I guess, they overbuy. They double buy from suppliers and then cancel orders. So I'm not an expert from the logistics standpoint, but I am a trader, and Apple has been a great stock because it's lagged the market until recently. It had been, it had to have a rubber band snapback. It did. It came back and made new highs yesterday, and then you saw some heavy profit taking. Let's see what this next round is, but I like the trade action in Apple, and it went from 140, 160, it broke out above 160, so that targets 180. So I still see some upside in there. And, there are a few stocks that I don't doubt. I don't doubt Elon Musk, and I don't doubt Apple, and I don't doubt Google. They've always figured out a way to make money. Apple makes more money, pure profit on a quarter, than most companies make in, 5 years.
That's actually a really good point, that they have a huge percentage of the smartphone profit share of the overall smartphone market, even though a much more disproportionately lower share of actual sales, just showing how fat those margins are over at Apple. So sounds like through all of this, Alan, I can probably guess you don't have an incredibly bullish outlook for something like gold or other sort of flight to safety solutions here.
Well, crude oil has come back. It's been between 45 and 85 for the year, and 65 is the midpoint. So let's see how this midpoint holds. It had such a strong run. It needed some unwinding, and now, it's readjusted. I'm still very bullish. And what I want to say about crude oil, everybody was so concerned about crude oil at $80 that that's going to slow the economy. But crude oil has been around the $75 or $80 from 2007 to 2014, and then again in 2018 or whatever it was, so 2016. So, it's been at this level before, and it's a positive sign, in my opinion, because it's demand driven that, I think the economy is expanding. So it's taken a little bit of break. So I want to say something to all those naysayers. What do you say now? They're saying it's a bad thing that it's pulled back? I don't know. You can't have it both ways. But to get to gold, I think gold has some solid risk reward. It's one asset class that hasn't risen. I'm a guy that likes to see assets rise. People call it inflation. I call it reflation. We have housing. We have stocks at record levels. These are things that we own. We want to go up. So inflation really isn't an issue. It's reflation. You can't use 2020 as a baseline. Let's look at crude oil. Crude oil was at zero. Zero. Of course it has to go up. All right. Interest rates are at zero. Of course they have to go up. So we're reflating some of our assets, and that's healthy. I think gold in the long term, it just can't stay above this $1,800 pivot, which is kind of critical. So we'll have to wait and see. But I think we want to look at energy, because I think that's an opportunity now that some of those stocks still are nowhere near their highs. And they finally rebounded this year after 5 years of being in the doldrums. But I still think there's great opportunity in that sector.
We'll be following up on the energy sector moves for sure. Alan, thanks so much for providing us with some context and sending the word on high. Alan Nuckman wants to know about those naysayers. Where there's their Messiah now? We'll find out maybe a little bit later in the program. That is the chief market strategist at Bullseye Options, setting up the trading day. Well,